Hello, this is Wes Bridel, and this is another Kingdom Calling Economic Update video. This is part 4 of 5, and we're continuing on with signs of hyperinflation, that they could be here before you know it. All these videos are short economic updates that follow the coming storm video we did November of 2009. If you haven't seen that, it's really important that you do, because it talks big picture about what's happening, and it's more important that you see that than this. You can go see that for free from the link that's near this video. And I'm going to jump into this now because it's also important we update what's going on from time to time. The US dollar is not doing well at all. I talked about this in the last video, but it's broken through resistance. The interest rates have gone up so much, even though the Federal Reserve is buying $75 billion of treasuries, and when they started this, they said they were going to do it to make interest rates go down. Interest rates instead have gone up. If the Federal Reserve says they can control interest rates and says that our economy needs interest rates to go down, then the fact that they can't control them and interest rates went up should scare you. Now, Ben Bernanke came out later and said, oh, this is a good thing. It means our economy is healthy. Well, that is absolutely ridiculous. So the opposite of what you wanted to happen happened, and that's a good thing. Basically, once again, Ben Bernanke is caught lying to us. That should scare you. He's the man that we're putting all our trust in to save our system, and which is a big problem with our system right now, that we've set ourselves up to depend on the government, which I consider the Federal Reserve part of the government. What they're saying they're going to do is not happening. It's a bad sign. CBO, which is the Congressional Budget Office, revised their budget U.S. with a $1.5 trillion deficit again this year. Massive amount of monies that we continue to borrow, and the more we borrow, the bigger that debt, the more we have to pay every year. Is a vicious circle that there's no way out of at this point. We used to talk about this being our children and our grandchildren's problem. It's urgent at this point. We said that 30 years ago. Well, guess what? The children, I was a child when we were talking about these things. It's a now problem. The U.S. is operating without a budget. It is mid-February. That is absolutely ridiculous that we don't have a budget. But the Congress last year didn't do it, and I'm not keeping up with it. I don't know why they haven't done it yet this year, but we have no budget in this country. Japan's debt was downgraded AA. Japan has more debt compared to the size of their economy than we have. The better thing for them is they're better savers than we are, but they have a massive amount of debt, and they have serious issues just as we do. Different but serious. ISM prices paid component predicts 6.2% consumer price index in 12 months. So if you look at what the prices paid index did, what it usually can foreshadow what's going to happen with consumer prices. It's foreshadowing 6.2% in 12 months, a 2.5% jump by March. So we're finally looking at this arriving. The reality is, of course, we have inflation, but the government rigs their numbers so that they don't count the things that you spend money on. They don't count food or oil, and even after they exclude those, they can change the number. If anything spikes, they can exclude that, so the numbers look good. But even considering all that, their formula should be going up here very soon based on the close correlation with these other indexes. Fed's Honig says that more quantitative easing is being discussed. So QE1 wasn't enough, QE2 wasn't enough, but if they just print and borrow a couple more $1 trillion, I'm sure that will fix our problem. The reality is they have to do this because other countries aren't going to buy our debt. We're issuing too much debt right now. So the Fed feels like they have to do that, even though it's not doing any good, in order, this is my guess, but if they don't buy the debt, who's going to buy the debt? The dollar would just go up in smoke immediately. So they're going to keep buying the debt. The problem is other people in the world aren't completely stupid, and eventually they're going to notice, hey, the U.S. government is printing money to buy its own debt. Maybe we shouldn't hold that money anymore. It's not going to be too long before that happens. Okay, the Fed now owns more treasury debt than China. So for a long time we've talked about how much money we owe China and how we're so dependent on China. And China, we owe China just a little bit more than we owe Japan. We now owe, we being the U.S. Treasury, the U.S. government owes the Federal Reserve, the United States Federal Reserve, more than they owe China. It's crazy. Matter of fact, when June comes, we will owe the Federal Reserve more than the U.S. government owes both China and Japan combined. That's how much money the Federal Reserve is giving to the Treasury, buying Treasury debt. It's absolutely crazy. It's unbelievable that the world is less... I say us, so I'm certainly not one of the ones making the decision. I'm against it. But us as U.S. citizens, it's letting us get away with this. It's not going to continue for that much longer. Let's see, Bernanke is looking at government manipulate CPI number. I just talked about this, calling inflation low, and he's out there saying we have no problem. Inflation's low, and therefore we can keep printing money. Well, the way he's decided inflation low was a number that he manipulated, not just him, but his branch of the government to determine this. So they manipulate a number, that number comes out manipulated saying inflation's low, and therefore we can keep printing money. Well, the rest of the world who doesn't have our CPI number sees inflation. You can go to the grocery store and see inflation, yet they say it's low, and therefore they can keep printing money, which is causing all this inflation. It's going to get ugly. MIT created an alternative to the CPI. It's called the Billion Price Project. It measures inflation by looking at 1 billion different prices on the internet worldwide, and it shows much higher inflation than CPI. We're not the only ones printing. Chinese money supply has increased 70% in the last 2 years. So China's not the, China certainly has a brighter future overall because they come from a much lower place than the United States. There's certainly going to be a lot of growth there in the future, but they're doing some ugly things, and they're certainly going to have their crash as well. Portuguese bond yields hit a new all-time high. So we've kind of had this idea that the problems in Europe are done. They're not over. Saudi Arabia has 40% less oil reserves than reported. If you saw that WikiLeaks number, that's just a really big number. Supposedly the biggest oil reserve country in the world, and they have 40% less than what we've been told. Not only food, but energy issues are going to be extreme in the next decade. Thanks for watching this. I hope you've enjoyed it. I've got one more video for you. Again, if you haven't seen the Coming Storm video, there's a link to go watch it for free. Instead of just these bullet points, it gives you a big picture of what's going on, and I really recommend you watch that. Thanks, and God bless you.